Have you ever wondered how I was able to catch 16 risk reward off just a single trade trading gold during the ADA session while I was sleeping? Well, let's just get straight into the video. I'm going to dive deep into my exact trading strategy that I'm using every single day to generate money from the markets that I teach you guys within the course. So again, this is on gold during the ADA session because you guys know in the ADA session, gold tends to move a lot and it gives a lot of volatility and very good moves, right? Unlike indices, gold moves a lot during the ADA session. So let's just go over the 3 trades I took on July 1st during the ADA session. So these first 2 trades that I took were basically during ADA session, right? I was still off for these trades, and this trade was very simple. All this was here is if we go in replay mode here and go back to the 5-minute time frame here, right? All it was off a 5-minute PY mitigation, right? So we had this, or sorry, let's go to 15-minute here. So right here, we have the 15-minute PY, right? And actually, matter of fact, this aligns with the 5-minute as well. So you could have used either one. Point is, we tapped into the 15-minute PY here, and I was basically looking for my entry model, right? So I waited for my entry model, and I got my entry model here and took the long. Now, for me here, this was the PY I was actually looking at right here, which actually got hit to the tick here. I missed the initial entry, and then so I got in on this move here. As you can see, we hit it to the tick right here, based on how I teach you guys to draw the PYs. We hit it to the tick. We did not hit it here. We hit it here, and I was looking for my entry model. And all I did was take my OB entry model I teach all of you guys, and we took 5 risk reward on this trade. Where's my TP? Obviously weak highs because we are bullish in the market, right? On gold, we are clearly bullish. Remember guys, the easiest way to boost your win rate in trading is follow the trend and don't deviate from that. Don't try to take too many counter trend setups. Once in a while you can, but try not to take too many of those. So the target was just aligned with ADA session high. Ultimately, at the time, we didn't confirm that was ADA session high, but nonetheless, it was a weak high that I targeted for 4.85 risk reward to be exact. Next setup, okay? This is a continuation model based on my continuations that I teach you guys, right? And what is my entry here? All my course members know. This is my impulse model. So I entered off the impulse model entry, and again, TP, you can TP at the weak high or a little bit past it. For me, I TP a little bit past it, and all I do is look to the left. So if you just look to the left, you can find some sort of TPs, right? So you have this high here, right here that you can TP at. You can also TP at this high, but ultimately those highs don't matter too much to me. What I'm really looking at for a main target is this PY above. But like I said, since this is a later entry, meaning this is not the initial entry of the move, this is just a continuation, we could get a mitigation cycle to come back down here and then go higher, and that would hit me out at break even, right? Because the PY mitigation is right at my entry. So I wasn't interested in that, hence why I just TP'd fully at 6.7 risk to reward. All right, so that was the second trade there. Now, this is the trade that absolutely carried my account overnight. All right, this is a London session trade, right? So what is the mitigation here? We have a PY right here, okay? We also have a PY right here. So you have these 2 PYs, and as you can see, I was just waiting for my entry model once again. And in this case, this is actually a limit order model, okay? Why? Because, you know, we are pro trend. The draw on liquidity is very clear. I teach you guys all the time. Whenever draw on liquidity is clear, you want to be taking entries, and there's times where you can take the impulse or limit order entry model when draw on liquidity is clear and it's an internal continuation like this, right? Because if you just go on the higher time frame, I'll tell you exactly why my bias was bullish. We took out a 4-hour low. We are overall bullish on gold, right? So if you go to the daily, overall on the higher time frame, we are bullish. Not only did we tap into this daily sell to buy here, so this is our daily sell to buy, right? We also basically took out liquidity on the 4-hour. We took out a low. So what was my expectation of price? To that high. And once we take out this high, we also tapped into a 1-hour supply. Hence why we later, as you can see, dumped. Okay, but nonetheless, again, I was just trading towards the supply that I'm expecting price can actually dump from. So all this trade is here, right? Just a limit order here, and then my stop loss. I tell you guys all the time, if you're gonna trade limit orders, give your stop loss some breathing room, right? Either use structure, so you can use structure down here, or you put it a few ticks below the PY. So I was using this PY here and this as well. So you can combine these two if you like, right? Because I wanted to cover this one just in case we did come back down to this one, which we did right here, as you can see. So that's basically my stop loss right there. And then guess what? I have a limit order there. I have my stop loss set. I have my TP, and guess what? I go to sleep, right? It hits, it triggers. I'm like, cool. Okay, I'm in this trade. Now I just go to sleep and turn off my phone because Well, you guys know that this is a thing you guys have to understand about the market, which is you cannot control the market. Once you're in a trade, you let the market do its thing. And my edge and my strategy, I have very high accuracy in knowing where the market's going to go before it gives you that confirmation, right? We are anticipating the market, not just reacting. If you just react to every single move in the market, you're going to lose. Like for example, if you react to this, you're going to lose trying to short here, right? If you react to this, you're going to lose shorting here. This one could be a winner. This one, you probably lost here, right? Targeting these PYs below, right? So don't just trade off reactions, guys. Remember, learn to anticipate the market using the models that I'm teaching you guys. So this is just an example of a 16 risk reward trade that literally hit basically at 1 hour PY above, as you can see. So hope you guys do enjoy today's little trade recap. I'm trying to make these trade recap videos on YouTube a lot shorter now, so I don't ramble on too much. And obviously you guys voted in a poll in the Discord server for free, by the way, that you guys prefer these shorter trade recaps than longer ramble videos. So I'm gonna keep these tight, nice and tight, pause, nice and tight, and just straight to the point for you guys. So yeah, hope you guys did enjoy. Make sure to leave a like on the video, subscribe if you're brand new to the channel. That would help out the channel a lot. We're trying to grow to 20K subs by the end of this year. We'll see whether or not we reach it without you guys. You know, I wouldn't be where I am here in terms of the YouTube channel growth. So I really do appreciate you guys. Hence why I have a free Discord server. So again, if you want to join a free WAP, join the free Discord server. There's access to plenty of resources that you guys can take advantage of in there. And of course, last but not least, if you want to go pro in trading, you can take the 100 risk reward advanced course and learn the ins and outs from the beginning to the end of my entire trading system that I'm able to utilize to make a ton of risk reward each and every single day in the markets. I'll catch you all in the next one. Peace.